Good morning, good afternoon, good evening, everybody. Welcome to our How to Listen Earnings call. My name is Brent. Thank you, Curtis, to get us going this morning. Excited to spend some time with you as we jump in on looking at Allstate today. And I thought, with the World Series going on here in the United States, before I jump into our typical process, I've got a video to remind us who we're talking about today. So let me share this video and then we'll jump into the exercise. I love these Allstate Mayhem commercials.
Let's go, bud. Hurry up. Come on. I'm a baseball dad. Just because I didn't go pro doesn't mean my kid won't. See me, Dad. No pressure, kid. Just everyone watching. Coach says it doesn't matter if you win or lose the game, but that's what losers say. You got to swivel those hips, right? And you got to swing. More! And if you don't have the right insurance, you can be paying for this yourself. So get Allstate, save money, and be protected from mayhem. Yeah, like me.
Even though I didn't play pro, I'm here to kind of critique and give direction. I love these Mayhem commercials we get going today. Well, folks, we're talking about Allstate today. Before we get going, let's just make sure all of our tools are up and ready to go. So make sure you have your chat box. We have a number of us on the call today. So let's start with just put in the chat box where you're calling in from, city, state, country. Let's get a feel for who's on the call with us today. My colleagues and I are out of just south of Salt Lake City, Utah. Here, where we got a little bit of coolness coming in. If you're ready to ski, we're getting some snow up in the mountains here in a little bit. We'll be ready to go. Looking forward to that ski season here. But good to have you here today. We do these earnings call, how to listen to an earnings call every month. It's a great way for people to build their business and financial acumen. Excellent. Looks like we got people all over. So good morning, good afternoon in Netherlands. Good evening, I guess. Good to have you here as we get going and looking at our business and financial acumen program. We also are going to use some poll questions. So let me just pull up a couple poll questions today just to make sure that's working. So first one is around why showing up for this company, for this opportunity? We do these on a monthly basis. If you're a graduate of one of our business acumen programs, you get invited to these. But they're open to anybody. It's a great way to kind of understand, how do I listen to these earnings calls, make sense of them, but with that information, do something about it. So obviously we're doing Allstate today. Last month we did DraftKings. This next month we're going to do Yum Brands. So different industries, different companies. It's our way to help build an understanding around business acumen. Looks like most of us interested in the industry a little bit, but most of us just interested in continuing to build a business and financial acumen strength. So good to have you here with us as we get going. The question that I have as we get started here, you're coming to a program on how to listen to an earnings call and make sense of these calls. So my question is this: when's the last time you had a chance to listen to an earnings call is my question here. Let's see. Right here, let me see why it's not launching here. Oh, I got to close the other one. Sorry, let me come back here. Stop sharing. Here, this should work now. So my question again is, when's the last time you had a chance to listen to an earnings call? You're coming to an earnings call, a debrief, a chance to kind of review earnings calls. When's the last time you attended one? For some of you, it's this year. Obviously, we're into Q3 on a calendar year. So we've had at least 3 opportunities this year. Now, by the way, I can't think of a better time to be taking this class if you are interested in Allstate, because here just next Thursday, November 6th, they're going to do their Q3 reporting. So we're actually looking at Q2 because that's all they have available today. But it's a great time to kind of walk through that. And then my recommendation, if you have an interest in Allstate, is to take the tools we're going to share with you today and go engage around their next call, which will happen this next Thursday. So great time to be kind of invested and connected around this. So let me go ahead and start wrapping this poll up here. Go ahead and vote if you haven't yet. I'm going to close it here. Majority of us have responded, and here is our response. So most of us, it's been this year. Last year, it's been a while. I've never attended, and at least one of us said, I'd rather go to the dentist. Well, folks, my hope today is to inspire you enough to take advantage of these opportunities. I call them a hidden gem. It's an opportunity to truly understand what's going on in a business. No, folks, you don't have to be the CFO. You don't have to be the CEO to be able to make sense of these and use them in your career. Now, of course, if I'm a part of a publicly traded company like Allstate, that's a great thing for me to do, a quarterly check-in. What are we focused on? In our course, we do this little, as we kick off the course, we show an example of an individual coming out of work. There's snow-covered cars. I imagine my wife's from Calgary, Alberta, Canada. Like you're coming out of your office in Canada. Your car is totally covered with snow. They start cleaning it off. They spend all this time cleaning it off, and at the end they find, when they go to do their little remote, they find they actually cleaned off the wrong car. Folks, these earnings calls are a way to make sure we're working on the right car. So highly recommend, if you've been through one of our courses, a graduate, to be very familiar with the focus of this call. And what I want to do today is give you the resources to feel comfortable to engage around. Now, as you think about these calls, they happen on a quarterly basis. Majority of publicly traded companies will provide them. Now, imagine you're the CEO of the company, and there's some kind of daunting statistics around people's understanding of strategy, people's understanding around metrics, et cetera. For example, this percentage here comes from a Harvard business study. 95% of employees don't understand company strategy. Now, folks, I'm not suggesting that's your company. This was a Harvard review that they did. But on average, about 95% of employees don't understand corporate strategy. What we find here at Acumen Learning, we focus purely on this topic of business and financial acumen. Folks, that's all we do. We're kind of that inch wide, but a mile deep. We work with some of the best companies in the world, 34 of the Fortune 50, for example. Our clients or have been clients of our company. What we find is we go into these large corporations that employees are functionally brilliant, very good at what they do. Your knowledge, your capabilities around your role are far superior than anything that I have or would have around your responsibility. Yet we tend to kind of focus on our individual area, get very focused here. Now, our senior leaders are doing everything they can to drive financial performance, drive more cash and profitability. Well, I got senior leaders setting strategy, communicating that. And I got employees kind of focused here. What this business and financial acumen and ability to navigate these these earnings calls is kind of a stepping back period. Let's step back, see the big picture. Now, based upon what I heard, what should I do about it? So I'm going to give you a simple framework and 2 tools that will help you to kind of make sense of these with the ability to take that knowledge and be able to drive your day-to-day activity. Well, 95% of employees don't understand corporate strategy. Well, this one's also interesting. 90% of employees don't understand their company's business key metrics, et cetera. Well, folks, as we look at Allstate's Q2 performance that came out July 31st, like I said, here next week, November 6th, 9 a.m. Eastern time, you can get access to it. In fact, I'm going to show you how to access it here in just a moment. Well, imagine you're the CEO of Allstate, Thomas Wilson. Now, as they talk to him on the phone, most people, it sounds like the analysts and everybody was calling him Tom. I'll call him Mr. Wilson, et cetera. But as you look at this, imagine you're the CEO of Allstate, right? You understand some of these data points. You got 55,000 employees, right? I got 55,000 employees. How do I help them kind of get on the same page? You're running a company that's been around since 1931, protecting employees. You have 208 million in policies. 92% of your business is around kind of that property liability, or sometimes in the old days they call it property casualty. These protected device, how many are familiar with when you buy a new piece of technology or device and they do like a service plan or a protection plan? They're in that business. Health benefits, which they're divesting some of that. So here's your business operating in 50 states, the District of Columbia, and you're also with those protected services are starting to go international. As you think about, 95% of employees don't understand strategy, potentially. 95% of your employees potentially don't understand your key metrics and metrics, your combined ratio. What is that? How should I think about that? Your key profitability metrics, cash flow goals and objective. Well, the question really is this: what is it you need your employees to know? What is it you need your customers to know? Hey, what about those shareholders? What are we doing to make sure our shareholders are aware of what we're doing and are getting value from the company? And then the partnerships. Think about Allstate. You got all these independent sales agents that are partnering with you to provide your products and services. Well, folks, that's what these earnings calls are about. Now, they're not required by law to provide those. What they are required to provide is a quarterly report that they submit here in the United States for a U.S. company traded on a U.S. exchange. They submit what's called a 10Q. You might jot that down if you want to take some notes. Or if it's an annual one, they call it a 10K. Now, they have to submit that. They've got to get that out into the investor community. But they're not required to have this call. Well, thinking about some of those data points, 95% of employees may not understand strategy. 90% may not understand financial statements. What is it I want my employees, customers, shareholders, and partners to know? This is an opportunity to share. Now, folks, I've been doing this for a number of years. We have thousands and thousands of employees. Many of you are graduates of our program. Here's my guarantee to you. As you look at engaging around these earnings calls with the tool that we're going to provide at the end of our call today, as you use it 2 to 3 quarters, I promise you that it will build your credibility within your organization if you're looking at your company as a publicly traded company. It will build your career. It'll build your company. Now, folks, if you're a salesperson, in the chat box, give me a thumbs up or tell me, are you sales? If you're a commercial or salesperson, imagine if you did the same analysis with your customers. I tell you, it'll build your credibility with your customer. It'll build your career and your partnership. Not only will it build your company, but it'll build the company that you're selling into. Folks, my goal in the next 40-ish so minutes is to inspire you enough to say, you know what, I'm going to do this. I can do this. I can take this information and assess whatever company, whether it's the company I work for, the company I want to sell in, the company that I might partner with, or a supplier I might work with, or maybe you're just interested from an investment perspective. My guarantee, you use these tools, it will build your understanding, your credibility, your career, and your company experience. So let me start. As I said, I'm going to give you 3 tools. One is a simple framework. I can give you 2 tools, but let me give you the process of how to listen to these earnings calls. The packet we're going to give you follows this process. 3 steps as you look at listening to these earnings calls. First, you got to prepare for the call. There's an analysis portion. That's where those tools and the framework are going to be helpful. And then the application. Folks, this right here, my goodness, when I do my classes, I say, hey, look, I'm like Uber. I want a 5-star. I'm going to do everything I can to provide a world-class learning, development, execution-driven experience. But if in the end, you say it's a great experience, but you don't do this right here, folks, I've wasted your time. So my hope today is in the next few minutes is to inspire you enough to do something, to actually take this tool and use it. And as I said, 2 to 3 quarters consecutively, folks, it'll be a game changer for you. So let's jump into prepare. Here we go. As you look at these calls, for those that haven't had a chance to listen to these calls, in fact, a small percentage of us, I can't see the percentage for some reason, have never had a chance. For that group that has never had a chance, let me describe what they're like. As you look at this, there's kind of 2 parts to a typical earnings call. The first is what they call the prepared remarks. Folks, this is where their senior executives got on. They've prepared. They've talked internally. They're very specific about what they're going to communicate. And they will talk through kind of what we said we're going to do, how we performed, and folks, where are we going in the future? That's the typical kind of flow of that conversation. Typically, you'll have their CFO communicate as well as their CEO. Now, sometimes you'll have other groups. In fact, in this scenario, you had 3 individuals, their CEO, their presidents of their major business, that property and liability section, as well as their CFO all spoke. At the end of that, they open it up for a Q&A. Now, folks, that Q&A is not open to everybody. There's a couple companies that open it to everybody. For example, Tesla, they actually have a place where you can ask questions as an individual investor. But typically, the Q&A is for analysts. These are individuals working with some of the largest investment firms, whether that's Wells Fargo's, Barclays, these major investment firms. They track the company's performance. Their whole goal is to get as much information so they can provide a report. And in that report, they're going to make recommendations. There actually is 5 recommendations, but the more common ones we'd be familiar with are buy, hold, or sell. They're going to make a recommendation. So they get a chance to ask the clarifying questions. Folks, it's a great exercise to engage in. A lot of times I'll have a senior leader say, hey, if you're part of a publicly traded company, just listen to the prepared remarks. Now, folks, if it's better than doing nothing. So I think that's great. And it's a great way to kind of understand what the executives are talking about. Now, the I would recommend, if you ask me, what's my opinion, I would say the Q&A is absolutely valuable. Let me explain why. The prepared remarks is going to be their communication to the market. Now, by the way, it's not regulated. So there is a bit of a marketing pitch. What do we want the investors to know? What do we want our employees to know? The Q&A, though, helps you to kind of assess how legitimate is what they're communicating. They'll ask clarifying questions. You kind of get a feel, is the market kind of agreeing with what they're saying? Maybe kind of having a pause, or in some cases, actually disagreeing. I've literally listened to a call where analysts will say something like this. Okay, you're talking about your combined ratio. This is what you're saying you're going to do with that. Based upon what I've seen in your history, you've never hit that number. Can you explain to me how you're going to get there if you've never done it before? Kind of that real bold kind of challenging of it. But folks, it's a great way to see what's the market, what's the investment community looking at. But in the end, if you're limited on time, you're looking here. Now, typical session is about an hour. The prepared remarks are usually about 15 to 30 minutes max, and then the Q&A is the rest of the time. Folks, that's the call. Now, they're open to all of us. So as you prepare for this, first thing you got to do is locate this call. And just to give you a simplified way to do that, jump to your favorite web browser, and that's the way you're going to do it. So let me just kind of share real quickly a browser, and let's jump in there and let's see if we can get there. So if I wanted to go to Allstate, all I'm going to do is start typing in Allstate. Let me get my typer going here. Allstate, and it's already starting to guess investor relations. I could go there, but I want to be a little more specific. I know they only have their Q2, so I'm going to do something like that. Q2. So it's starting to pull stuff to you. Earnings call, results. Any of those are going to potentially get us to where we want to go. I'll just hit earnings. Now it's right there. It comes right up. Now you'll notice the first one is from the company itself. Now, folks, I typically want to go to the company itself because that's typically where you get the latest and greatest. They put the latest information as quickly out. Then you have these additional groups like Yahoo Finance is a common one, Business Wire, Motley Fool, Seeking Alpha. These are all groups that will kind of track it. Well, I click on it, I get access to it, and folks, they do a really good job. They're investor relation. Now you'll notice it's saying 3/4, but I told you, wait a second, they're not having the call until next Thursday. Well, if you want to go and engage around that call, here's what you're going to do. You click right here, and I go ahead and go hit listen. I plug that in, hit submit, and I'm ready to go. It's not going to start. It actually will send me an invite, and I'm ready to go. I can engage around. Now, folks, because the call has already happened, what do you do? Well, right here, it's going to give you all the information you'll need. Usually within 24 hours, they put all this information out. So some of the key things right here, a press release. This often comes out the night, once the close of the market, the night before the call, they'll put this out. Gives you a nice little review of what happened, some kind of measures and metrics, etc. Great resource. Now, I love it when they have a presentation, folks. I'm a visual person, and I love this. It's a nice summation of the key concepts they're going to talk about in the call. So again, another great resource. They got supplemental information, etc. Often you'll get a transcript. They don't have a transcript here. Well, folks, there's all sorts of great resources where you can get access to that. I like to use Seeking Alpha. I jump in there and I type in Allstate. Well, I've done it already because I prepared for this. Right here, you can either hit earnings or transcripts. Come right here. Boom, it's right here. Folks, this is word for word. Who was involved from the company? Who is on the conference call, analyst-wise, and then right here, here's word for word what was communicated. Now, folks, this is brilliant. This is a very helpful resource. Now, folks, we don't have time today, but with the advent of AI, there's a lot of simple things you can do. Taking the tool that we're going to give you and using your favorite AI tool, Copilot, ChatGPT, Gemini, etc. And that can help summate. Now, I'm going to give you some tools. My recommendation, the first 2 or 3 times, try and just work through the tools on your own. Once you're comfortable with it, then throw it into any AI, folks. It's amazing what you can do nowadays with it. Well, folks, that's how you access the information. Again, just a simple Google search, looking for the quarter you're interested in. And that's how you're going to access it. Now, the second step of the prepare phase is to go ahead and review your notes. You say, well, what notes are you talking about, Brent? Well, if you haven't done it yet, well, you can go back to the company, review their prior quarter, use the same tool I'm going to give you in preparation to listen to their most recent quarter. So, for example, if you didn't have this call opportunity, you could go to their Q2, use the tool to assess their Q2. Now, reviewing those notes as you go to listen to Q3, you get to kind of start to do like the analyst. This is what you said you're going to do. Let me see how you actually did. Now, folks, once you've done it, obviously the notes from the call, as you prepare for the next call, this tool will be a great way. That's where you're going to go to review your notes. The last thing I'd say on these calls, highly recommend doing this with a team, colleagues, peers, direct report. So if you're an individual, contributor, maybe just get with some colleagues, go to your manager, say, hey, can we review this together? If you're a manager, it's a great thing to do with your team. Let's see, I had a quick question here. Are the 5 recommendations the analysts have available for them on what do they, this stock, what are the other options there beyond buy, sell, or trade? You know what? My team researched those for me. You did a quick research for it. I'm trying to remember. I could find it quickly on Seeking Alpha. Kirst, I'll come back at the end. There's in between buy and hold, there's a stage, and in between hold and sell, there's a stage. Yes, you will get a recording of this as well. We'll come back to that question at the end. Team, just do a search for the 5 phases and we'll pull that up. Okay, analyze. What do we do there? Well, folks, this is where the model and the 2 tools come in. So just quickly, I can do a quick review of our 5-driver model. Folks, whether you're a multi-billion-dollar, in the first half of this year, for example, $33 billion in revenue at Allstate, or a small little street vendor, mom and pop shop, these are the 5 fundamental drivers every company focuses on: cash, profit, asset growth, and people. Now, the foundation of the first 3 drivers are the financial statements. And typically when people think business and financial acumen, they think of the financial statements. Well, the foundation of the cash driver is the cash flow statement. Now, we talk about cash in business for all my graduates. When we talk about the importance of cash, we have a simple statement. Cash is blank. What is that? If you think about cash in a business, cash is blank. What would you say about that? Cash is vitally important for a company. So cash could be vital. Cash could be king. Cash could be queen, royalty. In fact, Ron Sharon, who's a well-known executive, written a number of books, he says cash is a company's oxygen supply. So, of course, making sure you have cash to fund claims at Allstate, but also they get a lot of cash sent to them, and they then invest that cash because they don't want to just sit on that. $78 billion of cash from premiums. Well, they're not just going to sit on that. They're going to invest that, get a little benefit out of that, and then they'll use that cash to help fund the claims. So cash is vitally important. And when you look at cash in business, you're looking at kind of the cash on hand as well as the cash that they generate from their core business, what we call cash flow. Now, you talk about the profit driver. This is probably the driver we talk most about in business. Analysts are very interested in it as well. A lot of questions around profit. There's 2 fundamental levers you have to impact profit. And by way of reminder from anybody in the class, or you may know this as well, if I'm going to grow my profitability, there's 2 things you can do. You're going to increase one lever and or decrease the other lever. By way of reminder, what are those levers? If a company wants to grow profit, what do they have to do? Increase something and or decrease something. Put it in my chat box, will you? Now, the foundation of this driver is the income statement, also known as the P&L. We may be familiar with that. Yes, excellent, Neil. Many of others, Elaine, others, you want to increase your top line or revenue, also known as sell. So I want to increase my revenue, and I want to reduce my cost and or expenses, folks. That's what I call Business 101. By the way, if you're growing your revenue and reducing your costs, you're going to not only drive this driver, but you'll also drive your cash driver up here. So fundamental for business is increasing revenue, decreasing cost. And of course, balance is anything you own or control which has a value. As you look at what goes on in balance sheet. For the asset driver, what would you guess they own or control which has value at Allstate? Are they huge piece of equipment, manufacturing, retail space? No. They're providing insurance. So their key assets, the operating expenses will impact their profitability. But stuff like technology, a big part of insurance is the interface with the customer. So all this investment in technology, AI-driven technology, I put all this money in to make it as helpful and useful to file a claim, to get information or a quote. All that they put in, that's going to be assets they have. They may have contractual relationships. They have intellectual property. All these things play out. They have cash, right? All these are the assets. Now, the goal of the assets is how much do I have, and then how do I deploy them to drive success? Yes, Kyle, corporate buildings, technology, all this stuff plays out to their company. Now, of course, growth is what investors expect. And folks, people are what makes it happen. Folks, the value of this simple model is just as you're listening to this call, rather than having to try and take all the information and synthesize it yourself, you're going to boil it down to these 5 drivers. Are they talking about cash, profit, asset growth, and people? From there, ask some questions. Once you've got clear on the strategic focus, the next step is to go ahead and do the financial assessment. Folks, that's what I want to walk into. So let me introduce you to the first tool. You'll get in the packet we'll send to you at the end of this call. The first activity or tool is called the executive alignment tool. Let me explain how it works. As you're listening to this call, you're going to listen. Are they talking about cash, profit, asset growth, or people? Now, folks, if you've never taken one of our courses or it's been a long time, no worries. In the tool itself, you get a quick definition. In the yellow here on the screen, that's a quick definition of cash. If you jump down to profit, the first couple of sentences are going to be the same thing, a definition around profit. But right below that, folks, we give you a quick example of the types of terms or words you should be listening to. For example, if I want to put a slash mark or categorize a conversation or something they said around cash, I'm looking for some of those sources and uses of cash: dividends or distribution, stock buybacks, issuing stock, all the capital expenditures. Those are all potentially going to be cash. Now, what you'll find when you do this, by the way, it's not exact science. So I might hear something like capital expenditures, and I see it under my cash. Yeah, that's cash because I take cash to fund these capital projects. And they, by the way, Allstate talks a lot about that. They also, that's building new assets for the company as well. So if I invest in some new AI technology that I'm going to use over the next 3 to 5 years, that's going to use cash, but it's also developing technology for the future. Excellent. It looks like Brooklyn's put in some of those additional classifications there. As you look at once you've done that initial assessment, the next step is this. You answer 4 simple questions. Which business drivers seem to get the most attention and why? What are the 2 or 3 main points the executive was trying to make? What are their goals going forward? And what key questions or concerns were raised by the investment community? Folks, so imagine that. All I'm doing is I can listen to the call, listen for these 5 drivers, and answer 4 simple questions. I promise as you do this, it builds that credibility. It builds your conversations with your colleagues, your peers, your direct reports, which will build the company and also build your career. Well, let's go ahead and jump in and do it. I don't have time to go through the whole call, but here we go. Open your chat box. I've got a quote from their CEO, Mr. Wilson. And as we go through it, all I want you to do, everybody open, you don't have to go through my class to answer here. Let's put what we're hearing. Which of the 5 drivers is he talking about? So let's start with this first one. Revenues were $16.6 billion in the second quarter. That's a 5.8% increase compared to the second quarter of 2024. In my chat box, folks, put in there, which of the 5 drivers are you hearing based upon what they've said? I'll give you some trigger words right there. Revenues. Revenue is going to be a trigger word for me. Increase, 5.8% increase is also a trigger word for me. Profit and growth. Excellent. Now, folks, if you thought cash, that's okay. Don't beat yourself up, because actually increasing revenue is going to drive cash if you collect it over time. That being said, in the end, it's not that you will have all the same slash marks. What you'll find, we do about 1,000 of these sessions a year. The top 2 or 3 drivers will all race to the top. You're just trying to make sense of it so then you can answer the 4 questions. Next sentence, total policies in force increased 208 million. It's 4.2% over the prior year. That's being led by Allstate Protection Plan. What drivers do you see there? Okay, yeah. So all of these policies, what are they? Absolutely, those are assets, right? People are prepaying their policies. Those are assets. We're providing this insurance for them. We have obligations for them. So yeah, growing that asset base is important. Led by a certain segment of their business, the protection plans. Personal property liability, their core business, 94% of their business, in force increased 0.8%. Net income was $2.21 billion and adjusted net income was $1.6 billion, or $5.94 per diluted share. What drivers are you hearing there? Some of the ones we've already heard for sure. Profitability, yes. Your net income is all going to be. You got some growth in there, increased by 0.8%. Now, again, it could be cash as well, but definitely your profit and growth are going to be there. Adjusted net income return on equity was 28.6% over the 12 months. What drivers there? Let me explain ROE real quickly. That says for every $100, their investors have equity in the assets. They generate 28.6% return. Folks, if you invest in something, you get a 28.6% benefit or value of your investment. That's what we're looking at here. Now, whether or not all that money goes to them, gets distributed, but that's a really good equity position, very strong. So equity position, yes, growth and profit, but you're also dealing with a little bit of assets. So the return on asset is a profit measure, but obvious a return on equity, but equity is going to be part of your balance sheet as well. And we create shareholder value. What driver there? Cash, profit, asset growth, and people. We delivering excellent operating results. As you see up top, growing the personal property liability business through the transformative growth strategy. That's pretty easy. Expanding protection services, proactively investing in $77 billion. What drivers are you seeing, folks? Let me jump to the next one. Keep putting them in. Just kind of scan through this one and say, what drivers? Now, here's their CFO. What drivers do you see there? I won't read it. Just kind of walk through it real quickly here. What are you seeing? In fact, I'll underline some trigger words for me. Some of them are a repeat of what we heard Mr. Wilson say as well. Excellent, folks. You can continue and scroll through the second paragraph as well. But folks, just kind of scroll up and down your chat box. As long as everybody's sending it to everyone, you're going to see what our colleagues or peers, etc., other individuals from different companies are saying. But what drivers, if you just scroll up and down in your chat box, what drivers seem to be kind of focused on here? If you just through these two quotes, you got a pretty good idea of what they're focusing on. Definitely profitability, definitely growth, a little bit around people, a little bit around assets, a little bit on cash, but definitely seeing a whole lot. If you look at just these two quotes around cash, profit, and assets seem to be the ones. Now, a little bit on people. I'm not saying there isn't, but look at that profit, assets, and growth, how much we saw. Now, folks, this is my numbers. If you look at, you may have different numbers, but the key ones that stand out to me are going to be the profit and the growth. So see how quickly you can kind of say, oh, here's what they're focusing on. Now let me go answer some relevant questions. That's where the rest of the tool comes in. So you go in and answer the 4 questions. Which business drivers seem to get the most attention and why? What are the 2 or 3 main points the executive was trying to make? What are the goals, objectives going forward? And what key questions or concerns were brought up? Folks, I don't have time in the next 25 minutes or so for us to have all this weigh in and go through the process. If you happen to read through it and prepared, when I come to each question, put your responses in the chat box. I'm going to walk through it as I went through it in my preparation for our call today. So which business drivers seem to get the most attention? Let me start right there. Growth, for sure. So growth and profitability. So let's start growth. What was said? What was communicated? A key kind of overarching message I took was this transformative growth strategy in phase 4. And I'm like, what is that? What are they talking about? They had a 5-phase approach to grow their business that they started to implement back in 2019 and a real focus in the last couple of years. 5 things. Number 1, improve customer value. Expand customer access. How are we going to do some of that expansion? Number 4, we'll get to that. Increase sophistication and investment in our customer acquisition. So how we go after customers. By number 4, deploying new technologies in their ecosystem, driving organizational transformation. So that transformation that they started talking about years ago, the last couple of years has been a major emphasis. They're saying we're in that phase 4, all the new technologies, we're really going to drive transformation. So that's what they mean by it's working, is basically what they're saying. Other things they said, 21% increase on new personal property liability year over year. Policy count and customer base are expanding. These are all examples of what they communicated to the market. Some of the things they said in their slides, I love this. So kind of a strategy perspective. How are they going to grow? Well, increasing personal property liability market share. We want to go after that. So that's a strategy we're focused on. How are we going to do that? By expanding multiple things. But one of the key opportunities is their protection services opportunity. Where do we see growth as they look at the business? Property liability growth continues to improve auto policies in force, increasing higher new business more than offset the retention challenges. Here's that 21% growth rate they talked about, year over year numbers on the property liability side of the business. Auto, what are you seeing happening there? You see some nice growth numbers across the business. So growth was a big factor. Now, of course, one of the reasons they talk about that is who are they talking to? We'll get that sheet, Karen, at the very end. We'll get the access to this tool. So one of the things you're going to find is when the executives are talking to their investors, growth will be a key factor for sure. Well, let's shift gears, talk about profitability. What was communicated around there? A massive rebound in underwriting income. Just a year ago, for example, they had some losses, some real decreases. So in 1 year, you see a real change in their profitability and margin expansion. Real improvement on net income and that return on equity measure. Investment income and capital discipline. One of the things they talk about is they divested. They've got out of some of the business where they're not making money. And they've retaken those cash dollars and invested them into new opportunities where they see future potential growth. So folks, if you look at the focus of it, a lot of focus on growth, a lot around profitability. Well, what were the 2 or 3 key messages of the executive? Number 1 key message I took away from it is this idea, this transformation. We're making a transformation, really focused on growth. And folks, our plan is working. We're delivering profitable growth. In fact, here's what they said. The increase in new business across all channels, agents, independent agents, direct, is leading to increase in policies. One of the comments from the CEO stated that transformative growth is working today and will continue to work, build momentum there. So this idea of the things we said we'd do on this transformation, they're working. Number 2, financial strength provides the foundation for continued growth investment. Folks, there's a common phrase that says, revenue can hide a myriad of sins. What does that mean? When a company is doing well and performing well, it gives you more money to invest, to expand, to see opportunities. Whereas for many companies here in 2025, you're seeing some real kind of pausing in the market in a lot of industries. Well, if I'm running the company, my growth strategy is working, key metrics are working, that gives me more money to continue to invest. Some of the things they highlight is, number 1, the operational results. Great results we already talked about in the net income numbers, the ROE number. Repeatedly emphasizing as the justification for accelerating growth initiatives. So we're doing well in our core, which allows us to grow. Their CFO kind of commented about a divestiture they made around their health benefits section of their business. That divestment, they actually had a gain on the sale, but they're going to take that money and invest it in other key opportunities they have available to them. The last thing that kind of stood out to me, proactive risk management. Making sure we're managing the underwriting discipline. Weather, you think about property challenges, some of the weathers we were just talking about recently in Kentucky, for example. If you're in Kentucky, hope all is well with you. We had some significant flooding early October, earthquakes and other things that might impact their businesses. So really getting good at kind of anticipating risk and providing good investment opportunities. A couple areas they talked about in New York and New Jersey, they weren't profitable, but they've been able to adapt their underwriting and seen some improvements there, and really using technology to get more sophisticated at predicting profitability and risk that they're taking. So fundamentally, three things. The transformation is working. We're getting good numbers, which allows us to reinvest in other opportunities, and we're getting better at mitigating our risk as a company. Well, folks, number three, what were the goals and trends or objectives going forward? Number one is this kind of continued growth strategy. Still very focused on that. Obviously, the property liability, the core portion of the business, looking to continue to capture market share, but seeing a real opportunity on these protection services. Everything from cell phones to computers, being able to provide insurance there, good margins for them. Customer retention is going to be a key growth lever for them. So really focused on this, they call it a SAFE program: security, affordability, freedom, efficiency, making it easier for insurance to make sure that you're having a great customer experience. Now, folks, it kind of was intriguing to me. I have another carrier, I'm not going to say who, but I have another carrier who never reached out to me and said, hey, by the way, you have another opportunity on a discount here. Let's talk about it. Hey, or by the way, just want to let you know I bring it up because my auto insurance comes up here in just November. But I don't think I've ever got a call from my insurance agent saying, hey, by the way, we're going to you hit this level, you get a discount. Or by the way, hey, you didn't check this box. Are you you have this benefit now? Let's make sure. Well, they're actually going out to customers using AI to analyze the accounts, and they're going out to customers, make sure they're getting all the benefits. Boy, that's a huge thing in the insurance world, in my opinion, very positive for what they're doing. Investment portfolio. So taking some of the dollars they had in some areas that they're divesting and reinvesting in good opportunities. Again, that big chunk of change they have to invest, making sure they're getting good returns on it. And then targeting new business channels. The company aims to capture market share by matching consumer preferences. Well, finally, folks, so that's what they said. Great quarter, great performance. Our transition's working. What we said we're going to do is working. Let's continue to mitigate risks and keep all of our customers. What did the analysts say? Well, really focus again on that growth focus, like what's going on from a growth perspective, kind of questioning, are you really going to get the growth, et cetera, was part of that. Some other things that, let me go back here. Customer retention as a growth lever was a conversation they talked about. Portfolio, targeting new business channels was another one. So those same concepts, they had many questions around their key strategies, saying, let me tell you what is going on around your growth. How much growth in what area? As you look at the product market, where do you see expansion opportunities? You divested this health benefit. Where are you going to reinvest those money? Those were the types of questions that they kind of brought up. Well, folks, what do I know? I know they had a great quarter, much better than a year ago this time. Really, the transformation that they focused on over the last year, all that effort, you're really seeing some benefits from it. Well, let's see if the numbers really communicate that same message. So the tool that we have is called the Navigating the Financial. It will be in the packet we'll give you here in just a few short minutes. As you look at this, it brings the 5 drivers to one place. It also brings some of these key metrics. Now, folks, if you've never been in our class, no worries. Right here, you're going to give you what are the typical key metrics. Now, of course, if I was doing a full analysis of Allstate, I would look at their combined ratio, which, by the way, was 92%. What does that mean? It's basically how much they pay out in premiums, what their cost is. It's kind of their profit measure. So for every $100 they brought in, they got $9 of profitability in their company. Now, a year ago this time for the quarter, they were at 101. That meant for every $100 they brought in, they were spending $101. So real improvement there. But if I was looking at a specific industry, I might want to find their specific metric or measure. Well, as you look at this, we didn't go through statements, but right here, it tells you where to go to find the metrics. So folks, you don't have to be a CFO. You don't even have to go through our class. This tool will help you assess what's going on. Now, if you haven't been through one of our classes, we got some resources to help you for your learning, but just a quick Google search and say, what is cash and cash equivalent? Why is it important? Will be a great way to help you understand their numbers. Well, let me kind of walk you through how to use this just on a couple, and then we'll wrap up this statement and jump into the apply phase. So folks, here's how it works. You come in here, you look at what I'm looking for. I'm looking for cash and cash equivalent. Just to make sure we're comfortable using this tool, if you'll put in the chat box here, what statement, see if we can recognize this tool, what statement am I going to go to find my cash and cash equivalent? Now, there's three statements, an income statement, a balance sheet, or cash flow. Based upon my tool, what statement are we going to? Excellent, Samuel, Sergio, absolutely. We're looking at that balance sheet. Now, you don't have it in front of you, but you can do that, do a Google search and pull it up. I've got it right here for you. It's kind of hard to see here, but let me give you, it's right here, cash, $995 million. Now, some would weave in this, because this is their investment portfolio. This is actually cash dollars. Rather than keep it in their cash account, they have the ability to invest that and make a little benefit off of that. But the actual number on their statement is the 995. So you pull that over right here, okay? Well, let's go and do the second one. We're going to go get our cash flow. What statement do I want to go to get that? Again, income, balance, or cash flow. There you go. And Nazim, absolutely. Sergio, Sergio, to get the cash flow, let's get clear here. So this one right here, what statement am I going to? Nazim, you were correct. It's right here. It's our cash flow statement. That's where we're going to go to get it, okay? So we jump over here. If you're in my class, you'll know this. This is one of our most important line items for any company. Excuse me, it's right above that. I can't see it very well. Right here, net cash provided by operating activities. This is the difference between all the cash that came into their business in the first 6 months of 2025 minus the cash that went out. So in the chat box, how much is it based upon the tool? You put it in there. How much cash and how much net cash provided by operating activities for the first 6 months of 2023, how much do they generate? Put in the chat box. There you go, folks, right here. So I pull that over, okay? Well, I'm doing the quarter. I could actually go subtract this number from the Q1 to get a more distinct number. But for ease of time, it's fine. Just pull it in. Let's go and jump into revenue. I'm going to go to that third statement. It's net income. I jump in here. Let's do the quarterly number since it gives it to me. Right there, I pull in my total revenue number. I go to do my net income. I'm going to come down here and hit this number right here. Pull that in. That's going to give me my net income. Now to do the calculation, all I'm going to do is take this number, divided by this number, and that gives you 12.5. So what does that tell me, folks? That says for every $100 they brought in their company in the first 6 months of this year, in the quarter, they generate 12.5%. Now, is that good or bad? Well, common kind of index you might look at is the S&P 500. Which in 2024, I think it was around 10 to 11%, somewhere in that range. So here at 12.5%, it's a good number. That's a good number at 12.5%. Now, what you'd want to look at is, well, let's see how it did the year before. Well, that's where the rest of this calculation. Now, I don't have time to do all of it. I'm giving that calculation. But if I wanted to compare, I would go to Q2 of last year. Now, look at that improvement on their net margin. Now, folks, if you had more time, you could jump into their documents. You'd see they did have a gain on the sale of their healthcare. There's about $800 million of dollars that came over when they sold off some of their health benefit practice. So that's inflating this a little bit. But even if you were to take that out, adjust for the income tax because you increased your profits, you're still going to be close to that 10%-ish, maybe 8% type number, but definitely an improvement. You can look at how well they've grown on their top line revenue. What is the return on asset? For every $100 they have to invest in their asset, how much profit do they generate in that quarter? Well, folks, not only can you do it on a quarterly basis, but you can do a year to date. For the first 6 months, you can see how they've done. So 8% if you do the whole year, for 6 months versus 4.8% a year ago this time. So what do I know? Well, the numbers suggest they did have a good quarter, more profitability, strong cash generation, year-over-year performance, a lot of good information as you look at their numbers. So not only is it what they said they would do, but how they perform looks pretty good. Last step is to apply it. So how do I apply it, folks? This is the part that absolutely is the most important. As I work with our clients, I love the content. I love the framework. The most important thing, though, is to get people to do something with it. And so let me share the potential benefits you can get from a course like this or using these tools. Folks, years ago, we had a customer, unbeknownst to us, work with a third-party assessment group to do an ROI calculation. What they did is they took our program and they took the people that were in it, they tracked them over periods of time. They came back and they said, what's the benefit for the course? We haven't shared the link here. It's coming up here, Lucia. We're almost there. If we need to put it in now, feel free. There you go. Brooklyn's just put it in there. But as we get closer to wrapping this up, they found a 300% benefit. Basically, focusing on business and financial acumen, improving upon that's going to get a pretty good return. But the most important factors they found, what were the benefits their employees got, were these things. 84% of those who took the course through this assessment found improved the performance of our business and function. 81 said that they would increase their ability to collaborate across functions as well as up to management. And that's number or C there. 77% they improved upward communication. 77% said they improved employee engagement. 75% increased business focus, and 84% improved teamwork. Folks, if you want to have a great way to build your credibility, your career, and your company, is taking these tools and using them. These types of outcomes will absolutely have those types of impact. So, folks, the last part of it is to do something with it. To know and not to do is not to know. To know you have these resources, for us to give them, and to not do anything, it's a waste of our time. So, for this, the last part of the tool is to go through what are you going to do about. First thing is just what were some new insights. Here's some things that stood out to me. Allstate is back and profitable mode, stronger than before. Growth is just happening. It's not just happening. It's planned. It's distributed. What they said they were going to do, they're doing. Which, by the way, markets love that. Agent productivity is up 20%. Capital is being actively managed. Where are they going to reallocate funds to drive more business? And external risks are being managed. They're very aware of the risks that they're taking. These are all kind of foundational takeaways from my perspective. So the next step, the last one, I say kind of an extra bullet, was their culture and execution discipline. I loved as I reviewed it. There's a very strong tone of accountability from the CEO and CFO and the whole team as a way to drive business, which, by the way, the market loves that type of approach. Well, so the second part of the apply phase is, what are you going to do about it? Now, I put myself in the context, if I was working for Allstate, what would I do? Number one, I would really be focused on this transformative growth goals. How can I use technology to help drive success? How can we really make this transformation and I be an active member of that? Apply a profitable mindset to everyday decisions. How are my decisions impacting increase of revenue or managing cost is a simple way to think about it. And then the last thing, if you have any sort of connection around their capital allocation, they've got these funds, they're going to reallocate. How can we continue to create value for both our members, those that buy our products or services, but also internally, how can we get better execution? Might be some simple things that I could articulate or focus on. Now, folks, I'm a consultant as well, so I put this, and if you've been with me, you've seen very common. The more I know about industries, the better I am as a consultant. So one of the things I like to do is compare. Well, let's look at Progressive. Let's look at Geico. Let's look at some of these others, State Farms. Where are they similar? Where are they different? Share this information with my consultants as well as clients, new customers. As they think about industries, how should I think about the insurance industry? Now, folks, if you're from Allstate, reach out to us. We'd love to work with you, provide an incredible world-class experience. Once employees understand the big picture of the company, absolutely increases their engagement, helps you to drive the results. How do I get 55,000 employees driving to success? So Mr. Wilson's hearing this, love to talk to you guys. Well, folks, that is the last step of the process. Once you've gone through all this, go have a conversation. If I'm an individual contributor, go talk to your manager, share what you learned about it. If you're looking at a customer or a partner, go to your sales team. Hey, based upon what I heard, here's how we can partner with Allstate. If it's a competitor, how can we differentiate ourselves? Folks, take those 3 items and go sit down with your manager, have a conversation. Based upon what I heard as I reviewed our call, here's the top 3 things of what I think I should focus on. What do you think about that? Remember, as I started the course, the example of somebody clean off a snow-covered car. Folks, this absolutely will make sure you're focused on the right car. Well, as we wrap up today, how would I go back as I go to the next quarter? Remember that second step of the prepare phase was to review your notes. Once you've done it, I just walked through that. You're going to see that you're going to have this earnings call video on our website. You'll get sent to you. You can grab the data, grab the information, and the next time you jump here on November 6th and listen to their call, you can do a quick review of their Q2. So basically, all the work you do here is reusable in the next quarter you review. Folks, as we wrap up, here's my question to you. Your challenge, who will you analyze today? In fact, I might have a poll question. Let me see if I got that poll question. That just says yum. I don't mean it's yum like I'm hungry. It means yum foods. Sorry about that. Let's see my poll questions. So who are you gonna assess? That's my question to you. Who are you gonna look to assess using this tool? Answer that as we wrap up. Well, folks, it's absolutely been my pleasure today. So we got in the chat box the link to access it. Our next date, if you want to sign up, I would highly recommend attend 2 or 3 of these consecutively. Because rather than waiting a full quarter to practice using this, every month you can practice using this. Our next date is going to be November 19th here in North America, United States. We have our Thanksgiving. So rather than last week, we're going to do it the week before. So please join us. Great weeks to kind of engage around that. We'll be looking at Yum Foods. So that is KFC, Taco Bell, Pizza Hut are all examples. Last thing is you can access the tool. But folks, if you need help with this topic, as I showed you, a 300% return, high 70% plus of outcome-based learning and development, please reach out to us. If you're an individual contributor, if you go to this website, you'll get $100 off our self-paced online learning. You want a quick understanding of this? Great resource, absolutely valuable. If you have a team, if you're part of a leadership team, if you're part of the sales enablement or L&D group, reach out to us. Our goal is to build the credibility, build the career, and build your company. With that in mind, thank you very much for your time. I'll stay on and answer any additional questions. Here's our poll. This is who everybody's going to look at. A number of us are looking at who we work for, compete against, invest in, interested, and looks forward. Come to the Yum Brands discussion here on the 19th. Thank you very much for your time. If you have any questions, I'll stay on. Otherwise, have a great day, folks.